What's up? It is day 34 on Build You, or on Project 100, my journey to my first 100K with trading and sharing the journey with you guys. Today's chapter, or today's third video is called Build You, which I'm going to get into a second. But as an overlay of what's going to happen today, I'm going to be sharing with you guys some key mental models that I found very, very interesting coming towards me the last few days by reading the book of The Daily Trading Coach, which is currently my read, and by watching some podcasts from Kurush interviewing high-level profitable traders. I'm going to be sharing those with you, just my inner thoughts, how the process, just because today there is no trades that happened. Maybe I can show you right now. The market really completely nuked out, or not completely, it's just dropping down. But in my opinion, it's a very good opportunity to buy spot long-term bags. I've been positioning myself into Solana. I've been positioning or looking to position myself into BTC, Ethereum, just safer assets where I assume this is a very normal shakeout currently that we're seeing with a lot of fear coming in when we can see the fear and greed index. And this is an incredible opportunity to position ourselves just because historically all of the last bull runs, October and November have been up. So there is no reason for me not to assume it's going to continue. So I'm going to be positioning myself. And as a cool side note, as mentioned on the last video, since I wanted to participate in Kurusha course, I sold the majority of things. So basically missed on a 30% drop, which is awesome for the longs that I can open now because I just have way more capital to be on the risk side again. So when everybody's fearful, you have to be faithful in the strategy and position yourself accordingly to what you think is correct. And yeah, this is essentially what's going on. I'm going to get right into it. Why Build You? Should I start with this? No, I'm going to leave it to the last because this is the most interesting one that I want to share. But I want to start off with another one, which is number one, which is from the podcast from Kurush and Trader Mains. He went over, Trader Mains is essentially a multimillionaire trader trading for more than, I think, 10 years. From what I picked up, I think he mentioned 2007, so even more than 10 years, yeah. He has been going through his journey, or essentially he was sharing his journey in a very eloquent way. It was very easy to follow. But the most amount of things he said were kind of copy-paste, or not copy-paste, but like normal stuff. But what I found very interesting, because this was a context that I could resonate with, is essentially when it clicked for him. He was sharing his journey, how he went through mentors, how he learned from other people, how he went from crypto into Forex, then into stocks, then back into crypto. And basically just sharing his journey on what exactly happened within and how he learned his strategy. He went through a lot of strategies at some part. So from strategy hopping, as we talked on last week, he went over to having his own strategy, which I'm also currently in. From strategy hopping, I went over to strategy, or one strategy. And then he said for him, it clicked when he finally understood what he wants to be looking for. It sounds a little bit vague, but what this essentially means is you have a basket of bread, and in this basket, you have to look specifically of which crumbles, of which specific bread you want to get out to make your money. I know, weird analogy, but essentially, he got clear on triggers. We all have a strategy where we say, let's say we are on the short side, the price comes up, down. Then we are in the area of interest, which some of you guys maybe know as a trading term. This is the area of interest. This is the area where you want to do business in. So usually a market is either efficient or inefficient. Efficient means the price is balanced, the price is fair, and there usually in those circumstances, if you are not going into the lower time frame, the edge is hard to find just because algorithms and market makers decide where the price will go to. super hard to trade in those environments, and the risk rewards are shitty, and the win rates are also shitty. So essentially what you want to look for as a trader is the area of interest where there is inefficiency, where the market has either on the buyer side or on the seller side an inefficiency. There is some type of disbalance. And in those area of interests, you want to do business in. And he said, what I really liked is it really clicked for him to become profitable when he found out exactly in this area of interest, what am I actually looking for? Because when you go into a course, when you watch a YouTube video, what you usually see is somebody drawing like a market, and he says, when exactly this happens, then you buy. But then the market is not like that. Every chart you're looking at is not the same. Every chart is completely variable. You cannot just have a copy paste. The variability for that is just immensely low. It actually probably goes to zero just because even on the lower time frame there are differences. So like factually, you cannot have the same charts over and over copy pasted. So patterns don't usually transfer like 1 + 1 is 2. It's not like math. It's definitely not, because there is variability of markets evolving. So just by sheer variance, markets cannot be the same. So what he said is he defined his strategy as strongly as possible. And he says, when those markers are set, when I can check off those boxes, I will enter the trade. So essentially, he needs to understand what this is. In this area of interest where he wants to do business, and is this checking my checklists? And if this is, he enters the trade. And this apparently really helped him to find a profitable strategy, or not find it, but also execute it on a profitable strategy when he finally understood is, what do I want to see to happen? This is essentially a little bit further defined, like a nuanced definition of pattern recognition. Pattern recognition can be, I have seen that before, but you don't know what to do. But the difference to profitable trading is you see the pattern multiple times and you know what you have to do. This is essentially what helped him to go into profitable strategy. And the second part of today is also the headline, which is Build You. When you go through trading through YouTube, whoever got you into trading, he probably got you in there with hype, saying you it's easy to make money. Look here, he has a Ferrari. Look, oh my God, he had a Lamborghini within 1 day. And here's the funniest part. It really is possible to do that. Like, I could literally, I'm not even joking, get my phone now, which is recording me, press one button, and in 1 hour have a Lamborghini in front of my house. You understand the point. It is technically possible. You have the opportunity. It is possible. But 95% of people lose money. So, just from this base, if this is first principle thinking, if 95% of people think that, oh my God, it means thinking the opposite, inverting that thought process, so not focusing on the money, will essentially differentiate you from the 5%, from the 95%, and put you into the 5% basket if the other metrics are also correct. So just as a behavioral pattern, it's smarter to do completely the opposite of what everybody does, and you will be probably closer to the reality as if you follow somebody completely. So this is the first principle where I'm coming from. And going deeper into this, if you're not focusing on money, what are you focusing on? And if you're trading, if you're actively like trying to become a trader, why are you trading? Why not do sales? Why not do business? Why not do like talk to humans? Like, we have no humans in trading. It's just lines and mathematics and numbers, just freaky. So it's a geek job when you look at it from a neutral perspective. But there has to be a reason why you are trading, besides just the money and the potential. For me, it's the psychological part. It's super intriguing to find out that people that are very, very profitable and very good investors, good traders, know how to exploit multiple variables. So it's like a chess piece. So you have to understand multiple scenarios that could happen and calculate all of them and make a risk assessment of what is smart to do. and making those bets every single day on strategies you have developed that you think have an edge. And this sounds super intriguing, at least to me. So when you're not focusing on money, you have to focus yourself on something else, which is the execution of building your own persona, building yourself. So besides building the bankroll, you can build yourself. And that's a cool thing that I really came up to today, reading the book of The Daily Trading Coach, was one sentence that he said, or one phrase: in trading, we'll develop ourselves. Every gain is an opportunity to overcome greed and overconfidence. Every loss is an opportunity to build resilience. So no, with trading, you cannot build communication skills or convincing skills, but what you can build is a character that is resilient and a character that is in control over his overconfident and greedy side. So next time you have a loss, it's easy to think, oh my God, I lost from my bank account, but it's probably better to think, this is the test that I have to overcome, that is testing my resilience level to get to the next level. So if this is a part of you that you want to be in the future, sitting in a couch as an old man or old woman and thinking about yourself and thinking, who am I would definitely want to be a person that is resilient. A person that can weather any storm, and it can be factually and rational, know what to do, make the calculated bets, even if there is zombies outside of the house and the outcome seems hopeless. You can keep a cool head, and I find this chilling and I find this cool. So I would definitely want to build resilience. So by doing that, you can have a loop, not of only winners, but also of losers, and see those as beneficial as well, because they can test your resilience level. If you have lost all of your money and build it up again, this is probably the most weather proof that you are who you say you are, which is resilient. And I find this very, very cool to, from now on, not look at trades as, oh my God, I lost money, but oh yeah, this is the opportunity for me to actually take the test of resilience again. And also maybe from another perspective, you could say that the market is giving you what you are not good in. So if you are losing a lot, you're being tested by the market because the market thinks you're not resilient enough to weather the storm. So the more you're being tested and you get learning out of it, so you have a feedback loop into that incorporated, where you build your psychology and your strategy, you're being retested until you reach the level of resilience which is sufficient enough to keep going and proceed over to the next step, which is from losing to break even, from break even to profits, from break even to for profits to more and more and more profits. That's cool. And also from that side, if some people make a lot of money because maybe they are pretty resilient of losing, but they get overconfident and greedy, and all of a sudden they lose their entire bank when it really matters. Well, there is not thousands in the bank, but millions. So yeah, currently I'm definitely in the basket of have to build resilience, and maybe in the future I will be in the overconfident side, and I have to come back to this and rewatch this and remember, okay, I used to be in the losing problems. Now I'm just in the greedy problems. I just have to solve them in a psychological manner. And yeah, that's something I came up with, or not came up with, which I was reflecting on by this statement from the Daily Trading Coach. If you guys want to read that incredible book, it's basically teaching you how to be your own coach in a neutral way. This specific part was chapter 27, which is build emotional resilience, which I think so far has been the best chapter because it made me really think, and it gave me instructions on how to overcome thought patterns that are not very helpful and try to shift you from the 95% into the 5% basket. So yeah, this is essentially what happened. On the trading side, no trades actually happened for the 075 strategy since the last H-bar trade that I took. We're hands off at the moment with the strategy because I would trade. I'm like actively watching for trades. It's just there are no opportunities for the strategy right now. I'm gonna be patient until those opportunities come up, and then I will be taking more trades. But as of right now, this is not the case. And for now, the best is to, I think, position myself into spot positions or like low leverage positions for the long term for swing plays. Yeah, as you guys know, Solana was opened. I'm looking for BTC, ETH, and so on and so on. And yeah, that was essentially the update for today. Hope you guys are killing it in the markets. Hope you guys are going through an interesting journey, and hope you find a cool progress to make for you as a person. And yeah, I'll keep you guys updated for day, will be 35, 36, I think 37. Yeah, we're slowly approaching 15th of October, which is another 15 days, like 2 weeks. And then we're going to Cape Town, and we're just going to be continuing those things on Cape Town level. But yeah, up to that point, I wish you guys all the best. See ya.